Good evening, ladies and gentlemen. This is Clueless Trading Frank, and here's a brief but important update on a few critical market forecasts that's on everyone's mind going into the second week of January 2017. So the next 20 minutes, I'm going to cover a series of important charts, specifically to keep it brief, on the S&P 500, the Dow Jones Industrial Average that you're seeing on the background. And put in my 2 cents as to what my tactical forecast is for the coming weeks going towards the end of January. I will, at this point, not make any projections ahead of further than January, end of January 2017, as there are many different external and extraneous factors, political and economic and seasonal, that are going to be hitting the market. So we'll take one step at a time. So saying all that, behind you, you're seeing a picture. You see a chart on the Dow Jones Industrial Average, and here's my take on it. I'm going to keep this real simple, just numbers. So at this point in time, we are right here. That's a mini. That looks like a very small mini bull flag that was formed in the 3 red candles that was in the last part of the day on Friday, weekly options and everything included. We got to its 19,999.63 or some silly number like that. But the reality of the thing is that given that the markets are run completely, or almost dominated, 80% of the daily volume on the market is dominated by algorithmic high frequency trading black box programs that I've been talking about for years now. It's not that strange to think that there was that one of the sell programs that's put out there, probably a sell limit. I'm sorry, what do you call it? Sell limit that's out there at around Dow 20,000 got triggered, and right there was that mini little pullback, and we couldn't cross over 20,000. It really doesn't matter. 20,000 is a psychological number. It might get the masses a little bit excited that Dow's finally moving. They're starting to talk about the stock market, blah, blah, blah. The bottom line is, once that's triggered, you are talking about the last leg of a big move. I mean, last leg of the fifth wave that I talked about in one of my previous videocasts, which should bring us to levels that I'm going to show right now. So saying all that, it's not the end of the world that the markets can shoot up, have an exhaustion top, and then pull down. But let's walk through this, okay? Like they say, picture speaks 1,000 words, and Clueless Trading videocasts speak 1,000,000 words. So the bottom line is it's for you guys to really expend your brain cells a little bit and understand what I'm saying. So here we are. This was the end of the year. December 31st on let me just change the color of this thing here. I'll just leave it. So December 31st, 2016, everyone's freaking out. There was a Friday afternoon. Things were deep oversold. There was all kinds of portfolio rebalancing, all kinds of funny stuff that happens on a money management, portfolio management standpoint out there. And I alerted my traders and members that, the things were heavy oversold, and we should expect to get a tactical reflex bounce within the next 24 to 48 hours. That is exactly what we got. That is exactly what we got. On January 3rd, first day of trading 2017, we gapped open 18 S&P points. Humongous day, Tuesday, right? And then the market decides to pull back, fill the gap, walked my members and free trial subscribers like a robot that I try to be at times through the whole to the exact give or take a couple of points to where the markets were. Filled the gap, moved up powerful, pulled back again, and then finally on Friday, it was just a humongous moment as the text took off. And of course, I want to remind everyone, you don't get that every day, and neither do you get it from any other service, that exactly what I said was going to happen in Amazon, that what was the requirement needed for the stock to completely break out, not only happened, but exceeded those levels. Okay? And please listen to the previous video cast prior to this one that's out there for public viewing, and you will see exactly what I talked about on the free market update webinar the day before this incident, quote unquote, happened, which was Amazon calls up 800 gazillion percent up, not to mention other stuff that went berserk higher. That is the value and the intrinsic value that you're paying that small amount of money every single month to be at Clueless 8 Trading. All right. Not just that, but of course, the real-time trade alerts, the real-time charts, the comments, the news analysis, the simple explanations of complex economic and macro global financial events. These are the components of the value-added service that Clueless 8 Trading provides. So for newer members listening to this, for free trial subscribers listening to us, that's what we do out here. Not just performance, which are outsized, but an ongoing educational, all-around type of knowledge-based, what should I say, knowledge-based environment that Clueless 8 Trading provides. Saying all that, let's get back into the charts here. So at this point in time, this is what I see. If this is a bull flag, then we're going to basically open up and we're going to head towards somewhere around 20,050, somewhere around there, 20,060, give or take a couple of points. That would be hitting the upper end of this channel, which is exactly where the market went at the end of the year. I'm sorry, at the beginning on January 3rd before it pulled back. So that would be my first target, which would be around 20,050, 20,060. Once that's engaged, I don't personally think that there is enough power, but who knows, to get an immediate overshoot to channel number 2 right here, this mid channel, that would be somewhere around the 20,160 level. I think once it hits here, you're going to see an immediate pullback, psychological and technical, that's going to come and test this very powerful breakout level that's around that 19,900 something level. Let's see what it was. This green line here, that's the breakout level you're talking about. So what we're talking about here. So that's around 19,000, let's say 988. Call it 19,990. So what I think would happen is that we are going to. Oh, here it is. Let me get the line. Okay, there you go. So what I think is going to happen is we are going to. Sorry about that. I got the pen here. Let me collect my thoughts. All right, so we're going to basically move up here, hit this channel, and then we're going to pull back, at least retest this breakout level, this one, this green line, and at that point, attempt to, if the market really wants to make another quick intermediate term high, bounce back up and head towards that 20,100. The downside scenario is that, not downside, but at least a corrective scenario would be that we get up here, and then we try to hold the support, the breakout level. We fail. We come to the bottom of this ascending wedge, which I talked about for weeks. This is the ascending wedge, this line here and this line here, and that was the breakout. I'm sorry, the ascending wedge was actually here where it broke out of. But anyway, now there's another ascending wedge here, as you can see. So what we would do is we would pull up, come down, and this triangle, because ascending wedge is nothing but a very large ascending triangle. I'm sorry, ascending triangle, not ascending wedge. We would come down here, and that would be around 19,900. Okay, and from here, attempt another bounce. Otherwise, we might just open up tomorrow a few S&P points higher, Dow points higher, and then immediately go towards this zone here of 19,900, roughly about 100 points or so, a little less, and then try to find some support here. What gets tricky is if we lose 19,800 right here, then we are going to basically lose this red line, which is a support line here. That support line broken would mean that we would immediately go towards the 19,700 level and possibly create a large W pattern known as a dragon bullish. That is only if the market's intermediate term uptrend is intact. We do, for now it's intact, but we don't know exactly whether or not that will prevail as we get towards the middle of the month, which I'd like to remind everyone is exactly when things get really turbulent, the waves get really choppy, and the 15th, which is a Sunday, by the way, give or take a couple of days, the previous Friday, maybe the following Monday or Tuesday, gets very, very turbulent. That's the reset time for the month. So be aware of that, okay? It's happened pretty much 90% of the time, and people who have been with my members for years know very well exactly what I'm talking about. Okay, so if that's a dragon bullish and it pulls back 200 points, let's say, or 300 points down to 19,700, it's not the end of the world. We certainly want to catch the move down, which would be a substantial gain in the triple digits, 100, 200, possibly 300% on the SPX puts. And we certainly want to be alerted. I'll do my best to alert people on that, and I certainly do that all the time. And that would be a fantastic scenario. Once it hits the support level, that's a critical support. As you can see here, it would make a triple bottom. And from that level, we could have a very powerful move higher as we get towards the third week of January, going into the end of the month. Keep in mind, earnings are starting next week. The bank earnings are starting. So that could be another push that's going to push the market up towards these levels that I talked about. So scenario one, we could move up a little bit, pull back, test the breakout, jump up again, and 20,100 or so I think will hold the market nicely prior to the kickoff on the earnings season, prior to the 20th. Or we slip down, test the bottom of this, test the bottom arm of the ascending triangle, which is around be 19,900, maybe a little bit less. Try to attempt to jump from there, and of course a scenario where if that breaks, then we create a dragon bullish pattern, but we shall see. In the meantime, there are some upside levels here that I'm not showing yet, but let's go towards one step. Let's see what happens this week, and then I'll update these higher levels that we're looking at, which looks like it translates. One second. I could scroll it down to show you the magic numbers. The numbers are as high as 20,352, 20,295, 20,280, and then of course this level here, 20,182, and I just showed you where we can go up here, which is around 20,060 or so. Let's move on to the next chart, the S&P. So showing the same type of structure, we have a rising wedge here. We have the original uptrend line that was broken on the 28th of December, right here. So that measures up to 2,300. That measures up to 2,300. This is an actual representation of the S&P 500, not the E-minis. So you don't have to worry about adjusting the numbers. So upper end of that is roughly about 2,300. I've done a series of tests, extrapolations on other charts, and that's the number we arrive at, which is around 2,300 to 2,320. That could be a possible top, a tradable top in the market in a major way, where the market will find some very heavy resistance at around the 2,300 level. That would be on an extreme bullish event. I'm talking about within the next 30 days or so. We're not talking about the next 6 months, all right? And I think that's where we get a substantial pullback. Anyway, simple thing about life. The higher you go, if you get a 5% pullback, it's not like you're crashing down to 1,800. You get a 10% pullback from 2,300, you're only losing 2,300 points. You're coming down to only 2,100. So the higher you go, it's not like, your levels that you pull back to are still going to be relatively higher than what you were when you were trading at the S&P 2000, right? Think of that for a minute. So we have a rising wedge here. Here are the numbers. Upper end of this wedge is 2284. These are very short-term projections. So we could get that by tomorrow, 2385. If we break out above that, then we have that free flying zone here In the meantime, this wedge is creating a minor bull flag. It might break down, and if it does break down, we are talking about, look at this channel here, the dotted line, right? Right there, right there. So we would be retesting the mid Bollinger, which is around 2270. And you don't have to memorize these. You can write them down. But of course, I'm always providing real-time charts showing the same things again. I'm just trying to give you all a flavor of what I see happening. We have a lower Bollinger here at 2260, which I consider to be pretty critical support, because under 2260, there's a free fall all the way down to 2245 and 2240. If we drop 60 points, let's say, or so, or 50 points from 2290, once we get up there, if we get up there, let's say from 2280, we drop 40 points. That's roughly about 240 Dow points. That's 240 Dow points. It's going to feel to a lot of non-technical traders like it's the end of the world when we drop 240 Dow points in 1 or 2 single days. But it is not. It is basically only 40 S&P points. It's not only, because there will be substantial damage to a lot of the high beta momentum stocks that we trade in, including Dow stocks, and it's not going to feel good if you're not positioned right. So I'll certainly be there to put in the right timely alerts, and hopefully we make a substantial amount of money if we do get that type of correction. And we could get that. I just want to warn people. We could get that very quickly. And the faster it happens, the better off it is. If that does happen, let's say, and we get a corrective action down here, that should set us up, given that the market overall is on a daily uptrend. This is an hourly chart, obviously. We could possibly, from that point, create another dragon bullish pattern, right? So it'll be like, it'll be something like this. Or we could slip, touch a very critical support at 2232, which we touched at the end of last year. And for the bulls and the longs, they better hold this, because if it breaks this, there's a big fat gap here waiting to swallow all the lemmings and chasers, and that would be around that 2200 level or 2190, and that's a pretty big drop. I don't foresee that happening this week, but it could be something that could happen by the middle of the month, to be honest with you. All right. So get the pen here. At this point, bulls want this. Bulls want this flag. Am I not getting the pen? I only have 3 minutes left from this video. Okay, I'm not getting this pen. Why? Okay, won't give it to me. Bulls want this pullback here. This one holding, possibly come down, retest this channel, and then move up from here. Bears want this to be broken, this level to be taken out around 2260, and then fall rather quickly to this uptrend line here that was generated from this 2180 level back on early part of December. Real simple. I got 2 minutes, so let me move on to the next chart. This is a more exact chart from Warden, freestockschart.com. Upper Bollinger is showing us 20,196. Very sharp 5-day moving average here, which is terrific, supporting the moving uptrend in the market. That is exactly where we closed at on Friday. We have a mid Bollinger here at 18,770. Let's not talk about that right now, because this is a weekly chart we're looking at. But on a weekly basis, we could touch all those numbers over the next 30 to 45 days. On the daily, if we bring it down, if I have time here, I have 60 seconds. Here we go. Upper Bollinger, 20,037, could find heavy resistance. Acceleration band, 20,136. Pinch Bollinger here, you can see that. That's on the lower Bollinger, is 19,694. Very important support at the 34 moving average at 19,556. Very, very critical support at the 50-day moving average at 19,182. And ladies and gentlemen, I will post the charts of these tomorrow, so you can have them on your screen. And good luck to everyone coming up this week. And I do want to emphasize very, very importantly in my last few seconds I've left, focus on the tactical charts I post, period. Without them, you're not going to make it. Have a great